Good evening, everyone. Welcome to this episode of Market Pulse for other indices. Let's take a look at what all the indices are doing for this week, are going to do for this week, starting September 13th to 19th September 2021. Okay. All right. So let's begin with auto index. Just remove everything again. All right, here we are on the monthly chart. We are trading in this area of monthly supply. That's the monthly supply, which is still holding up. If you see, we have a lot of rejections coming in. That's your monthly demand zone, which is holding up. So that's a range that auto index is playing for the last few months, between, let's say, around 8, 10, 11,000 and 9,400. So we came back again to this demand zone, went up, hit that supply again, and started coming down. So we are coming from supply to lower end. So probably we might move further down here up to 9,400 if there are no demand zones on the daily. But we are in the middle of the curve, so we'll have to be careful about our trade setups that we take. Only once we break this supply off, this index will be very bullish and will probably give a new high. Otherwise, this is the area where, based on the broader index, we can look to go long or initiate some swing positions in the auto index on the monthly chart. The weekly chart, if you see, we are range bound between the same range, and we came to this area of demand zone and are moving up from that area of demand zone. The next supply that we have for Nifty Auto on the weekly chart is here. So we have some more room for this index to now move up. Maybe we will move to this area and then again consolidate, oscillate between these areas of supply before we break out either to the upper side or lower side. The overall trend is bullish, but it is showing signs of weakness because we are still unable to take the prior high here. And if we break this demand zone, we could move down further, and then the next area of demand zone for us to initiate swing positions or positional trades in the auto sector will be around at 8,200, but that's only when this area of demand is eaten up. So if you see, that's the area where if it breaks it, it might come to this point that is about 9,000 and then start turning up. Uh, Quickly look at the daily chart. We are in this consolidation, this congestion here, supply zone. So wait for this supply zone to be taken off on the daily chart, but multiple supply zones are available. That's the original daily supply zone that we have here. So if we break this, we could go probably all the way to this supply and then start coming down. Again, if there is a demand zone form, we could start moving up further after the supply is taken off. But right now, this is only for short-term trading, like a few days trades or intraday trade is also possible. Swing positions should be avoided or can be initiated only once we come at around 9,400. The intraday levels, that's a demand zone where we came to and are moving up from that area of demand zone. Intraday time frame, it does look slightly bullish. So if we start going above this, we could probably try to eat up all the sell orders that are available in this supply zone. So that's the origin of the move on from the smaller time frame. So from here to here, that's a range for tomorrow, and probably till we don't break at this point, you can look to short. At this point, you can look to go long, but it's a range bound trading, so don't expect higher uh, uh, moves. You should trade strictly based on RR. That's what we have for the auto index. Energy index, again a bullish index now. It did go beyond the prior high but is unable to sustain. Remember, but this is a monthly candle which is still live. Okay, which is still live. That's the prior high. We just pierced it and are hovering around there. On the weekly, again the same uh, picture. We are still hovering around that area, but the next demand zone that we have is all the way here. That's a weekly demand zone, and the origin of this move has started from here. So This is the demand zone from where again we can go long in the energy sector, probably for again a new high, but that's only when it comes here. Right now it is holding up. So let's take a quick look at the daily chart. It will offer us more clues. Now that's but the only problem is it is unable to sustain above the prior highs. So unless and until we have a convincing close and a nice rally candle coming out and a strong closure above the prior high, this looks a little shaky. So don't get aggressive uh, into aggressive buying mode. Look for confirmation shorts, and this will be the new area of demand for us. Maybe this is also good, but a confirmation setup is preferable here because we were unable to sustain the all-time highs. So new long positions can be initiated around 20,000 in some of the energy index stocks. On the intraday time frame, it's pretty much similar to Nifty. We are trading between these areas. So a tight range still happening on the energy index on the intra time frame. Only once we close above this, new highs and aggressive bullish positions can be initiated. When we come closer to this, we have another level which is slightly below that. So that's the level on top of level scenario. So as long as we are holding this areas of demand zone, don't short. Maybe it is ranging, consolidating before it gives a breakout of this. But if you break this area of demand zone, then fall back on the daily demand zone that we discussed. That is around 20,000 for initiating swing long positions. So it's an uptrend bullish, but wait for pullbacks or wait for the convincing close beyond the lifetime high. CNX financials again, an all-time high index. Like Nifty, after breaking the prior high, it is consolidating at that area. That's a new area of demand zone, which is still intact at around 16,900. On the weekly chart, similar, we have a very narrow range trading going on for the last 2 weeks. We pulled back, but again, the dips were being bought into. So wait for a consolidated breakout out of this, or we'll look at smaller time frames. New demand zones still at this area. That's a new weekly demand zone that has been created, which has been, so you can look to go long once it pulls back to that area of demand zone. On the daily, if you see again, consolidation mode, unable to break over that prior high, nor it is going down. So it's a wait and watch for this. Either let it break down, then you can initiate short-term swing positions up to this area of demand, or when it goes up and closes convincingly, then look at new areas of demand to be a buyer in the financial services index. So this is the demand supply that is holding up for, so that's the range, the intraday range for the financial services index. So we are at the upper end. Wait for this to break out to initiate aggressive longs, or new longs can be initiated for intraday trading at around 17,880 to 900. So bullish index, wait for pullbacks. FMCG index, again, a bullish index like the energy index and the financial index, all-time high scenario, new demand zone formed on the monthly at 37, 36,900 approximately. That's the area where swing positions and cash positions can be initiated. If you are holding cash position, there is no need to get out because the trend and momentum is strong and it is moving up pretty nicely. Uh, that's the area of demand on the weekly chart, but I would not be very this is not a very convincing demand zone for us to initiate swing long positions. But yes, short-term income longs can be initiated at this area, but swing positions should only be initiated at this. No supply zone overhead, so no shorting allowed. Again, after a bullish close on Friday, today again it is trying to move up. It did give a new high and it's trying to move up, maybe a few more consolidation and it goes up. That's the area that is holding up on the daily chart, where you can look for intraday opportunities. Once it pulls back there, you can initiate some short-term long positions. Again, consolidating. So you will see that most of these stocks will be range bound in a very narrow range. Don't get tempted to go long or go short unless you have confirmation. All right. On the intraday time frame, those are your areas of demand and no supply. So if we pull back to this area, initiate long positions for short-term income trading on the FMCG index. Infra index, we have been saying that in the all our past market pulse that this is a bullish sector and is likely to go up all the way to 5,500 approximately. Every week, this is month, it is nicely moving up. Uh, so that's, let me just delete this. So that's your monthly demand zone. We have found another new monthly demand zone here where we can initiate long positions. If we go deeper into this, you can trade this, but if we fall from here, then fall back on the lower level for long positions. Targets will be somewhere close to 5,500. Weekly, again, similar to the other indices like Nifty and financial services indices. It is consolidating after a big up move last week. This is consolidating, maybe wait for it to go beyond this to initiate aggressive long positions, which will take you further higher to possibly this level, that is 5,215. So it could test all the way up to 5,200 from here. So bullish bias, but don't be aggressive. Wait for pullbacks to this area of demand zone on the weekly to initiate swing positions and for short-term income. Okay, so if you see this, it's unable to go beyond this. So that's why longs will be really very aggressive as of now. So if you have to initiate new long position, short-term income long, this is the area where you can look for initiating long positions or wait for it to break out and then new demand zones can be traded. Uh, Good positional trades will be around 45 to 4,600 on the infra index. The intraday trading range, that's the intraday trading range. If you see, most of the indices are hovering here. So this range is very narrow. We could see a breakout or a breakdown soon, but till then, just be patient and don't hurry up to initiate long or shorts. Once we break this, shorts can be initiated. Once we break this, longs can be initiated, and within this you can do your intraday trading. Low on the curve, be buyer; at this point, be a seller. So bullish bias on infra, but wait for pullbacks. CNXIT, again, like the FMCG, this is a bullish index moving up strongly. That's the area of demand zone where cash and swing positions can be initiated, but it is pretty far right now. Those who are holding cash positions, no need to get out. You can just keep holding it because it's all-time index and might go up further. So today also, this week, we have started with bullish price action. So IT was doing well today, but towards the end, most of the gains were given off. TCS did well. So that's a demand zone where we can initiate new long positions based on the weekly, no supply zone, so no shorting. And on the daily chart, if you see, the next real demand zone for IT is here, which is quite far, 3,000 points lower, around 2,800 points lower. So you got to be careful about trading positions on the long side. Cash positions need not worry, but trading positions need to be careful unless we go beyond this. If you go beyond this and sustain, then we could see further up move coming in most of the IT stocks. But if we fail to break this high, then we could start drifting down all the way towards this area where new long positions can be initiated. Short-term income, that's the supply zone where we are stuck, but it is more or less taken off. So we could expect some move up, at least up to the prior high here. And that's the area of demand zone where you can look for going long again. So that's the range. So if you see, that's a supply zone here. Unless we break that, our longs will be here. Once we break this, maybe new long positions can be initiated at this area. So bullish bias, but we are in higher end of the curve. So be cautious about initiating new long positions. Wait for either break of the overhead supply on the 75 minutes, or then wait for a pullback to the daily demand zone to go long on the IT index. CNX Media. Now this is again a bullish sector in the short term. On the monthly, now this is still reeling down compared to all the other indices, PSU Bank and this one of the few indices which is still reeling down, but they do have a lot of room to move if they try to play catch up with most of the indices. That's the monthly supply zone, which is quite far. There are smaller time frame like weekly and daily hindrances, but these will be the targets. If it starts moving up, we could see it move all the way to 2350 and then 2800. For that to happen, we will have to go beyond this supply zone. Now, unless we don't go beyond this, these targets won't be opened up. And if this supply holds, new long positions can be initiated at this area based on stock specific, whichever comes into good areas of demand zone, you can initiate long positions. This will be still be the first target if we don't break this. But if we break this, that is going to be the target one. That's going to be the target two. So this seems to be moving up. That's where we are on the weekly chart. This is the consolidation we need to uh, take off. And we are again moving from an area of demand zone. So now you can initiate some short-term income longs and trade them up to, let's say, 1950 to 200, 2000. So, short-term income longs are possible. Uh, on the daily chart, if you see, we have gone up. That's the area where new long positions can be initiated if we have a pullback. That's the daily supply zone, which will be the upper end range for the media index as of now. So that's the range 1790 to 1650 approximately. And on the 75-minute chart, if you see, we are on the verge of breaking this again. That's where we are probably likely to move to 1750 with the momentum that we have on the smaller time frames. We are likely to move all the way to 1750. If from here we have a pullback, that will be a good area to think about initiating some long positions. So that's the range for intraday time frame. We are moving up towards a higher range. Intraday longs are possible. But once we come here, it's wiser to book profits and wait for pullbacks or breakout of the supply zone for new long positions on the media stocks. Metal index again moving up nicely after forming an all-time high. We pulled back to this monthly area of demand zone from where most of the metal stocks have been rising up again. No supply zone, so no shorts allowed. On the weekly, that's the area. This is not really a credible supply, but it's resisting price. So if you're not in any long positions, wait for this level to breach and then initiate long positions. If you're long, you don't have to worry, just keep drilling. So that's the range on the weekly that the metal index is going to play, expecting it to break out and give a new high, possibly test 6,000 on the metal index. That's what even the daily is showing. Not really good supply here. So we could see a further up move in the metal index. If we pull back from here, a good area of buying will be somewhere at around 56 to 70 to 5,700 on the metal index for a target of all-time high or 6,000 approximately. So bullish bias on this. That's the only supply that we have to worry about. Once this is taken off, then new highs will be printed. But if this is held, wait for a pullback to 56.71 for long positions and to this area for swing positions. All right, so those are your levels for Nifty Metal. Midcap index, again, bullish index like Nifty and energy and IT after breaking this prior top, which is going up relentlessly one way. That's a new area of demand zone on the monthly chart for the mid-cap index. We'll have to wait for this to initiate new positions on the swing side. Again, on the weekly, no supply zone, new demand zones formed here. Long positions are valid at this area around 27,700. no supply zone, so you're not allowed to short unless there is a stock specific supply zone in some of the mid cap indices. So that's the range. If we have a pullback to this area, you can initiate long positions, swing positions at around 26,600. This is the best area to initiate swing positions because we are getting overextended, but your short term income trading range on the long side will begin at around 28,700. And for intraday time frames, still that's the level that we have to wait for a pullback to go long. If you're holding it, keep trailing because it's a very sluggish move that we are seeing on the smaller time frame. So if the Nifty index is not able to break new highs, break and go to new highs, you could see this also coming down. So be cautious. Don't get over aggressive on the mid cap index. Pharma. Now again, an all-time high index. After printing that, it came down, nothing violated on the monthly chart. We are still consolidating between this. That's the next area of demand zone where long positions can be initiated, new long positions at around 12,300 on the pharma index. If we pull back here all the way to 12,300, 400, you could look at Dr. Reddy's or Cipla or maybe some of the other pharma stocks like PL, APL, they would offer us good entry points for swing positions. On the weekly chart, again, that's the area which is resisting, but I expect it to be breached. It's not a credible supply zone on the weekly, but before this is, until this is not breached, we have to be cautious about new longs. If you're holding longs, just make sure you keep trailing them. So that's the range on the weekly for this index. Around 14,800 to 13,600. We are at the upper end, so be careful. Longs or long profit should be protected. But today it is showing nice signs of moving up. So we could re-attack this area where sellers are there at around 14,500 to 14,600. So that is the range for the pharma index on the daily chart. So the demand zone is still at this point, and that's the supply area. So that's a range where at the upper end, be cautious about longs, shorts on confirmations. Short-term income shorts are possible or like intraday once we go all the way up to this area. So that is the area for us to look at. This is the area for new long positions, and the current range for intraday range for the pharma index is between 14,500 and 14,250. So it is oscillating. If we break this, maybe new highs. If we break this down, then look at new positions at this area and you can trade intraday shorts from here till here. So this is a new index that I'm adding for analysis. That's a Nifty Public Sector Enterprises Index, PSE. That's the monthly supply where we are trading. So pretty much high on the curve, but a very bullish index. That's the area of demand zone on the monthly. So this is your range on the monthly. For this, we are at high on the curve. Wait for this to break out to take new long positions or a pullback to take new long positions. Existing positions can still be held. So overrate supply here on the weekly, the actual supply starts at this point. So that's the real weekly supply. This is the monthly supply, but I'm expecting it to probably go deeper, hit the upper supply and then come. So expect another 250 points move all the way up to, let's say, 4,000 on this index. That's the weekly demand zone, which is holding up. So this is your range. I remove this monthly. So that's your range for the weekly on the Nifty PSE, and new long positions again here or here. Here it will be trading. If you don't touch this, then you can go long at this point. On the daily, this is one of the indices which is trying to move up. So we more or less have gone beyond this high. So there is that you can expect a good move up. If we fall back, that's an area where you can look to initiate new long positions for short-term income trading, like for few days. and your targets would be the same weekly supply. And for the daily part, this is the supply zone that you can look at as your immediate target, but I probably does. Yeah. So this is a range on the daily, about 3900 to 3650. That's a range on the daily chart for the PSE index. On the intraday time frame, again, longs only can be initiated if you are not long still. Longs can only be initiated at this area of demand zone. If we pull back, because we are at the upper edge of this supply, I'll show you that. So that is a supply that probably is holding up this. So once we break this area of supply, then you can expect the higher target of 3900 on this index. So that's your short-term income trading range between this 3670 to 3770 approximately. PSU Banks, now this is still consolidating after having hit this monthly supply, though it has been tested deeper and is likely to break off that supply and move to the higher supply, which is going to be around this point. So that's the other supply. So this I expected to move all the way up to 3000 to 3200, but this area of supply is holding it up. That's the demand. So this is the range on the monthly for this index. So if we come here, initiate long positions or initiate long positions once we break this. Confirmation shorts possible, but shorts will be only short-term income. On the weekly chart, if you see, that's the supply that is holding up. Possible demand, yeah, so that's the demand zone from where we have started to move up. As long as we are holding this, that is going to be the range, a narrow range. So this range is, this index is right now suitable for short-term income longs, or once if you pull back to this area, you can initiate some swing positions on the PSU index, maybe in stocks like Punjab National Bank or Bank of Baroda or State Bank of India. Right now we are holding the daily supply still. Okay, so that's unless we break this supply, we can't expect big moves in some of the PSU banking stocks. So that's the daily supply and that's the demand. So this is the curve for your range for your daily chart. And on the 75-minute chart, we are still playing this range. So let me mark this smaller time frame range for you. I'll daily. So that is the real supply zone. So that's a range for us on the intraday time frame. We are right now in the middle. So if you're in long or short positions, if profitable, keep trailing. If we come here, new long positions. If you go here, maybe confirmation shorts, because it is likely to break this and move up further higher on the PSU index. Realty, again, a stronger sector, which is where a lot of interest is being seen. That's the area where we are likely to move. Let me remove all the smaller time frame levels and show you the monthly level. So that's the monthly level that we are in, that we have, and the monthly demand zone is still here. All these areas of demand zone are smaller time frames. So remember, this is still a live candle, so I'm not considering this as a demand zone. The monthly demand zone is still here. So that's the range on the monthly chart, a strong bullish trend. It's likely to further move up to 480 to 500. So on pullbacks, you can look to initiate new long positions. That's the new area of demand zone on the weekly chart. Let's take a quick look at where our weekly supply is. So weekly supply is all the way at 476. So enough room for the index to move up all the way to 480. So bullish bias based on the monthly, weekly. On the daily, after this fall down, we are trying to move up. That's an area of demand zone that we have. So we are trying to move up. Once we go beyond this, it will move much faster. If we fail to go beyond this and start going lower, that's a new area of demand zone for you to initiate long positions, maybe some stocks like DLF or the other realty stocks. based on their supply and demand zones. And on the 75-minute chart, very narrow range movement. This is your area of demand on the 75-minute, a very compressive move likely to move up. So once that supply is breached and prices close beyond this, you could see a further acceleration on the realty index. But if we come down here, look at initiating positions on stocks in this sector, which are also pulling back into areas of demand. Small cap index, now this is pretty much similar to the all-time high indices, but it's a little slower compared to the mid-cap index. Mid-cap index is moving up faster. This one is now trying to move this month. So that's a monthly demand zone. So if you pull back here, swing positional trades can be initiated. No supply zone, no shorting. On the weekly chart, we just had a new high and are likely to move up further after moving from this area of demand zone. So that's the weekly demand zone curve. No supply, so avoid shorts unless your specific stock has a valid supply and you can go short. Similar, but the only thing that bothers me is the way this is moving up. This is not a very good sign because once it starts falling down, you will need very fewer candles, maybe 30% of the candles that you see here. 30% of the time it will probably come back all the way to this area. So be cautious about small cap. Don't chase, don't be aggressive in buying the small cap stocks. So wait for a pullback to this area of demand zone, or maybe we'll wait for one green bullish candle. So conservative approach on this index. No supply zone, so again no shorting. That's the new area of demand zone for us to look at short-term income long trading. You can also initiate some short-term income long provided you have some RR. So wait and watch. Be cautious on the small cap index. Don't be in a hurry. The Nifty Private Bank, this is pretty much similar to Bank Nifty because most of this index constituents are a part of Bank Nifty. So monthly no supply and is moving up from this area of demand zone, but yet to break the prior high. On the weekly, that's the area of supply zone which is still holding this index and not allowing it to move up. So be cautious, but the trend is still bullish. So every pullback should be used to be a buyer in this index for stocks like maybe Bandhan Bank, not Bandhan Bank, but ICICI Bank, HDFC Bank, Kotak Bank. If they come and pull back to this area of demand zone, you can look to be a buyer for swing positions, expecting it to break the supply and give a new high. Uh, on the daily chart, that's the range that we are still playing. So expect this index to move up further to this area of supply zone. So any stock like ICICI, HDFC, Kotak pulls back to good areas of, or even Axis for that matter, pulls back to good areas of demand zone, initiate long, and that good area of demand zone is here. So that's a beautiful area of demand zone for us to initiate short-term income longs on the private banks like ICICI, Axis, and Kotak, because they do move faster. So if we come here, buy, and this could be your target. So higher targets available, good reward to risk on this index. Smaller time frame, 75 minutes. So we are holding this supply here. So that's the upper edge, upper end of the supply zone. And this is the, so technically I'm not going to take this. I'm still going to take this. So that's a range for the private bank. It is going to remain oscillating between this. And once we break this, expect it to go all the way to the prior top. Or if we start falling, this and this area is where we can initiate new long positions on the private bank index. The last one is India VIX. Now this is again still hovering around those 14, 15 areas, unable to move up. But remember, that's the area from where it has moved up pre-COVID. A lot of supply on smaller time frames on the VIX index. It's in fact cooled off a little bit, which says that markets could move up a little bit further. So that's the area of demand zone where it is holding up. So this is the range for VIX. If it starts moving up, you could see the index coming down. So new long positions can be, new confirmation long positions can be initiated once in the VIX hits here, and you will probably see Nifty sitting in demand zone. But if it starts moving up, moving down further, the index will probably print new highs. All right. So uh, that's all about the indices. Please go through this disclaimer. Hope you guys find this index analysis every Monday that I put valuable. If you have any suggestions, comments, do put it on the video so that we can take your feedback and improve further. Thank you. Trade well, trade safe. Have a good trading week.